Hello, I'm Kendall Almerico, and welcome to this informational webinar about an investment opportunity into Tasty Equity. And joining me today is Chris Wiley, the CEO of Tasty Equity. Chris, thanks for being here to explain more information about this investment opportunity to those who are interested.
Hi, Kendall. Thanks for letting us get together.
Well, let's start with the basics. I mean, people obviously have seen something about what Tasty Equity is about, but when someone invests in Tasty Equity, what exactly are they investing in?
Tasty Equity is founded with 4 restaurants, 2 Hothead Burritos restaurants and 2 Rapid Fire Pizza restaurants, and that's the base from which we are building. So as they invest with us and we build more stores, they will own a piece of each of the new stores we plan to build.
So why did you pick Hothead Burritos and Rapid Fire Pizza as 2 of the restaurant businesses that Tasty Equity invests in?
So we're a 3rd generation restaurant family, and my brother founded 2 franchisors, the Hothead and Rapid Fire brands. So we have a very intimate understanding and relationship with him as the brand grows, and that's where we're beginning. In the future, we envision supporting other restaurant franchise brands.
So right now, if someone invests in Tasty Equity, they actually own a piece of those 4 restaurants you mentioned at the beginning, 2 Hothead Burritos restaurants and 2 Rapid Fire Pizza restaurants, but they also own a piece of every restaurant you invest in going forward through Tasty Equity, correct?
Yeah, that's exactly right. We started our first Rapid Fire Pizza in 2016 and funded our second one in 17, and then we acquired 2 Hothead Burrito stores in 17 as well, and that's our base. We're working on our 5th store now, and we have a 10-store plan laid out in our offering circular.
So the restaurants that we're talking about, Hothead Burritos and Rapid Fire Pizza that Tasty Equity invests in, they're part of what we call the fast casual restaurant business. How has the fast casual restaurant business done the past few months, especially with what's been going on with the COVID-19 pandemic?
Kendall, we feel very fortunate to have been in fast casual. And fast casual, for everyone who might not be familiar, is the type of restaurants where you walk down the service line, you point at the items you like, your food is assembled before your eyes, is handed to you hot and fresh and ready to go. The fast casual segment was really well set when COVID hit, by good fortune, in that we're probably 60% carryout. As a result of that, when the dining rooms closed, but we were allowed to continue with carryout, our carryout grew. Fortunately, we had deep partnerships with Grubhub and DoorDash and Uber Eats and the other local delivery companies. And like a lot of companies, we instituted curbside pickup. And those pieces of the business were very strong. Our Hothead Burritos stores actually did better than the prior year before the dining rooms even reopened. It was really a surprise.
Very interesting. So you mentioned before that you come from a long line restaurant family, and I think it's important for people who invest to know the pedigree that you and your brother Pete bring to Tasty Equity. Talk a little bit about your family and the people that are actually behind Tasty Equity.
So my father was one of the 5th employees, or the first 5 employees of Pizza Hut. The founders of Pizza Hut, Frank and Dan Carney, are like uncles to me. We grew up moving every year of our life as my dad helped to develop about 1,000 Pizza Huts throughout the southeastern United States. We got the bug, and Ray got into the business after a number of years in his own restaurants like Subway's. Ray ended up founding Hothead Burritos in 2007, and then in 2015 created Rapid Fire Pizza. When I say we're 3 generations, my son was our first sponsored owner-operator when he came out of the military in 2016, and we set him up in a 5-store plan.
That's awesome. So now the people that actually run Tasty Equity are you and your brother Pete. Tell us a little bit about Pete.
So Pete is all things marketing and technology in the restaurant industry. He joined Ray and actually created the original logos for Hothead, and then ultimately was a founding partner at Rapid Fire Pizza. He, together with his small team of consulting folks, support both restaurant brands. Everything you see about the brands, from signage and advertising to TV commercials. And that's his bailiwick. He covers all of that for all the franchisees. And Ray had challenged Pete and I to create a store development company to go build restaurants and expand the franchise system.
Let me ask you about that, because I think this is very important for investors to understand. So without getting too detailed, what does Tasty Equity actually do besides actually putting money into each of these restaurants they open? What types of services are you bringing to each restaurant to help them run more efficiently and hopefully profitably?
So think of us as the back office partner that does everything from select a location to work out the final plans for that location, arrange the banking, the additional capital that may be required. Part of what motivated us is about 80% of franchisees who apply to the brands don't have quite enough money to do a restaurant. So we provide all the back office services, but we fill in the difference to help get that down payment covered. And in many cases, we'll talk later about how we partner with the area developer in that local market. So there are local boots on the ground. And so we run it from behind the scenes, everything from HR and payroll to finance and accounting.
And doing that with the wealth of experience that your family has in the restaurant business, that's a big plus for Tasty Equity. Let's talk about the Regulation A offering, which is the stock offering that people that are watching this webinar have a chance to invest in. First of all, let's talk in general. Why did you decide to do what we call a Regulation A offering, where anyone in the general public, not just the rich and well-connected, can invest in Tasty Equity? Why do that rather than going to, venture capitalists or rich people to help finance the growth of your business?
Well, Kendall, I've had a long career at almost 25 years in capital markets. I've worked with angel investors and private equity funds and hedge funds, and I understand what they do, and they are, to a certain extent, partners as we develop the restaurants. But we used a Regulation A offering because we were inspired by what we saw other folks in the space do. One, a large beer brand. We saw how that made their patrons more loyal. It gave them a sense of belonging. So being that we serve more than 100,000 people every month across the entire franchise system. Again, we're 4 stores out of 110 in the franchise system. We saw an opportunity to give those fans a chance to have a piece of the action, make them feel more loyal, get them to spread that to their friends.
So is that one of the reasons why, if someone wants to invest in Tasty Equity and own part of the 4 stores that exist right now, 4 restaurants, as well as any that you open in the future, is that the reason that you set the minimum investment at $100, and a very, very low number for people to get in and own a part of Tasty Equity?
Yes, we work very hard to make that a simple, low number. About the price of a nice night out is our motto, or as one of our testimonial investors said, about the price of a nail job. She's great. So that allows people to get in a small amount. What we've seen is a very significant number of our investors, as they follow us, invest more and more and more every couple of months as they embrace the story. So the $100 is the way to get in. It gets you your lifetime discount. It gets you access to other special promotions, and most importantly, our VIP investor parties, which prior to COVID, we were going to have every month and rotate them around through the locations, both our locations and the corporate stores.
So it's really interesting. Not only when people invest in Tasty Equity do they actually own part of each of these stores and any other restaurants that you open in the future, but they also get what you just called perks or get discounts and things. Give us an example of what someone gets, for example, if they invest at a certain level. And I know all of these are on the website. Tell us where the website is where people can read them, but give us another couple of examples.
Sure. Well, by the way, it's at investintastyequity.com. We'll take you to the website. The perks start off with a lifetime discount card that is actually a card, like a credit card you can use to even activate the self-pour alcohol taps in the restaurants that are equipped with them. You get some buy one, get one free coupons and some entree coupons. And the more you invest, the more the perks you get. So at higher levels, you get a pizza party for 20 people or a pizza party for 50 people, or you can have dinner with Pete and I.
Right. And let's talk about the self-pour beer and alcohol. That's an amazing thing. Not all of the stores that Tasty Equity owns part of have this, but I know that's a big part of the future development. Talk about self-pour and what that means for people who haven't seen it yet, because it's really remarkable.
Yeah, so I discovered self-pour in my travels. It's sweeping the nation. It allows the patron to put on essentially a bracelet that they get when they check in the restaurant. Then they can pour their own beer, wine, cider, margaritas, even self-pour shots. Pete and I did the first installation in a rapid fire pizza location, and since then the corporate stores have done some. The corporate stores have also done a Hothead Burritos Cantina, which we plan to emulate in our soon-to-be new stores. Essentially, we do it for a couple of reasons. It attracts customers from a farther distance. People like a date night. They'll drive farther if they can relax and have a cocktail or glass of wine or such. They tend to spend a little more money, which is great for us. If you have 1,500 patrons a week going through a restaurant, if everybody buys, or if a third of them buy one cocktail, that takes your $10 per ticket to $12 a ticket.
And that's all good. That's all good for investors too, correct?
Great for us as
more
investors.
revenues, more good stuff for the investors.
And people have more fun. You see the sparkle in their eye after one or two alcohol drinks.
So let's talk about this because I think it's very important. Let's talk about what the expected return on investment is. And I don't mean, obviously, I know you can't promise anything or make any, absolute projections, but what is the exit strategy for people who invest in Tasty Equity? Where can they look forward to getting a return?
Yes. So it's a simple way to think about it is the model that we did with our stores we have so far. The first restaurant produced enough cash flow that within 1 year that funded the down payment on the second restaurant. By having those two restaurants, we had enough credibility with the bank to buy the two hothead restaurants with only a $25,000 deposit on essentially a $500,000 purchase. So the cash flows from the restaurant enable us to fund the next round of restaurants. The more restaurants we build, the more you own a piece of. And as we get to 20 or more restaurants, and by the way, our plan is to build about 10 a year through these partnerships. But as we get to 20 or more, that's when the big hedge funds, back to the hedge funds and private equity investors, there are about 100 funds that specialize in buying up bundles of restaurants. Now, they don't buy you out. They want you to manage your restaurant. They want you to continue operating. They invest in your restaurant. And when they make that investment, it creates an opportunity for the founding investors, or in our case, the folks through our Regulation A offering, to potentially cash in on some or all of their investment.
And so there's an exit strategy here of potentially a acquisition or partial acquisition by a hedge fund who comes in. There's also obviously the possibility in the future of dividends, assuming that the restaurants get positive, very seriously into the cash flow situation where you want to do that. But the goal here really is to keep building more restaurants to get to a point where there's an acquisition or a merger that gives an exit strategy in part or in whole to these investors who are putting $100 plus into your business.
That's absolutely right. So this year, our goal for this calendar year was to get to about $2 million. As we say in the ad or in the video, for every $200,000 we raise, we can build an additional restaurant. If we raise $2 million, that funds 10 restaurants. Well, those 10 restaurants will continue to fund about 10 more restaurants each year thereafter. So, and I know this from 20 years of being around the restaurant business. This is what my brothers did. This is how they created the franchisors, and this is what our big franchisees do. So our goal is to get into that perpetual motion of 10 a year, 10 a year, 10 a year, and that creates eventually cash flows that would support dividends, right? Because you can only build so many restaurants. But yes, our goal is to attract the interest of that institutional investor within 3 years, create what they call a liquidity event where our investors today get an opportunity to cash in a little bit and then ride to the next level with us.
So this is where someone who's watching today who's thinking they're on the fence about investing, their exit strategy is you're going to keep building restaurants, you're going to keep growing the Tasty Equity stable of restaurants, and there will be a liquidity event at some point in the future if things go well.
That is correct. And hopefully that's within 3 years. That's our goal.
Now, how do people invest? Where do they go and how can they invest?
You can do it in a couple of clicks, just like buying something from Amazon. You go to investintastyequity.com. At investintastyequity.com, you can see our offering. You can actually read our offering circular if you're into that sort of thing. You can watch the video that explains in 2 minutes or less how it all works. And you can get to know us a little bit, see some videos with our testimonial investors and things like that.
And I think it's also interesting to know that when people go to investintasty.com and decide to invest, you can do this with a credit card. You can do it through a direct, through your ACH, as we call it, through your bank. There's a number of different ways to invest, isn't there?
Yep, and it's as simple, again, as doing any sort of transaction where you might buy something on a website you've never used before. So it's, I think it's all of about 5 little screens that you can do on your phone. Again, you just decide up front, how you're going to pay. You can even agree to mail in a check later if you want to. In fact, we've had a number of people invest through their self-directed IRAs. That takes an extra step, but we absolutely set that up. And we'll talk maybe more in a minute, but you can even buy stock and invest in it and then give it away as gifts.
Let's talk about that. If someone wants to give this as a gift, I know we're not that close to the holiday season, but it's coming up.
No.
People can actually buy this, and then once they've been cleared as an investor, give it as a gift. Hey, what's better than a gift of stock or an investment in something, right?
Absolutely. Well, in fact, we went live. We became qualified with the SEC last December. We went live with our offering on December 16th, right in the middle of the gift giving season. And right away, we had people acquire it. They tended to be grandparent types who bought maybe $1,000 and then wanted to give it away as investments to their kids. There are some restrictions. They do need to be adults. But all you do is after the stock has been awarded to you and your purchase of the stock is complete, you fill out a simple online form. You identify the party that you want to gift the shares to. And when that happens, you also get to decide if you want to keep the perks for yourself or if you want to also give the perks away to that other party.
So, Chris, just to wrap this up, I know we've answered a lot of the questions that we see very often of people asking us online or people contacting you. But if people have other questions that they would like to ask, what's the easiest way to get in touch with you or to get their questions answered about investing in Tasty Equity?
Two quick ways. If you see our promotions on Facebook, or if you followed us or gone to the Facebook pages, or investintastyequity.com, you can comment through the Facebook pages and social media. We'll respond right back to you through that. And you'll see some trail of public comments for commonly asked questions. Or you can use the email contact@tastyequity.com right on the main website. And our investor relations team will respond to you right away. And we're even open to getting on the phone and having a conversation for the serious investors.
There we go. Chris, thank you very much for joining me today. I appreciate all the information, and I hope this was helpful to potential investors.
Thanks, Kendall. You made it easy.
Hey, and just all of you watching out there, go to investintastyequity.com, read what's on the page, do your homework, talk to your advisors, make sure you understand what you're doing. And if you're interested in investing, because every investment, no matter what company it's in, involves some risk, and you want to make sure that you're aware of that. We all do. But read what's on there, watch the videos, and if you're interested in investing, it's very simple. Just click the buttons and follow the forms. And thank you very much for being here with us today, and we will see you next time.